Matthew Graham from MortgageNewsDaily.com, he had a great analogy this week in one of his morning market commentaries where he described the Federal Reserve and the bond market as being stuck in this staring contest, kind of each waiting for the other to blink first. On one hand, you have the bond market and their forecasts that have built in the anticipation that the Fed would slash their short-term benchmark rate by the end of the year. Definitely a positive long-term economic outlook. Very good for rates, and one of the reasons why rates improved through January. On the other hand, you have the Fed, who has been adamant about not only hiking their short-term rate, but also holding those elevated levels through the end of 23 and potentially through 24. Now, for the last year and a half, mortgage rate volatility has been tied to inflation, specifically our fight to tackle inflation. And this makes incoming economic data crucial. If data shows that the economy is slowing, that inflation is coming down, it tells the markets that, hey, we're winning this fight against inflation. And it tells the Fed that they don't need to be quite as restrictive as they've been proclaiming. If, however, data shows a very strong and robust economy, like it did with last Friday's jobs report, pointing to a very strong labor market, it validates the narrative that persistent inflation is still a real concern, and it justifies the Fed's determination to slow the economy, which pushes mortgage rates higher. This tug of war makes this Tuesday's CPI, the Consumer Price Index inflation data, huge. No report has caused more market and rate volatility than CPI, and I'm sure this week will not disappoint. If inflation comes in higher than expected, I would expect for mortgage rates to continue to worsen. If, however, the report confirms that inflation is continuing to soften month over month and year over year, expect for mortgage rates to improve, potentially even regaining some of the ground we lost last week. Hey, if you have any questions about these headlines, about these rate trends, or if you're ready to discuss your own pre-approval options, let's talk.